Well, we all woke up to some big story happening somewhere, but it has a lot of impact on us. You know what? Ghana is not immune from shocks of global event, and as a feud between Israel and Iran intensifies amid the trading of missiles and evacuations, the more alarming it becomes with all the potential to undo the gains made. Today, the dollar is what? Someone spoke to me this morning and said, I'm getting the dollar for 10 point something. But if we are not careful, this will erode those gains. We'll look at the various strands of this war and what the nation should be doing to contain and mitigate its impact. And you know what? Lead researcher here and our lead data analyst, Isaac Kofi Agyei, is ready to help you understand why this war is happening far away from us, but is so close to home. Kofi?
Joe and Sweetie, good morning.
Good morning.
Well, another geopolitical bell has been rung, and Ghana finds itself in that mix again.
And you're here to help us understand.
Absolutely. And you remember the Russia-Ukraine templates, and we suffered a lot as a result of that conflict, which is still ongoing, but there's a new addition, a new kid on the block, which is Iran and Israel. And let's try and analyze why this is important. It's not just about Israel and Iran. It's about the Middle East belt, which is a key player when we talk about oil and the energy sector. Why? Because if you're talking about the original members of OPEC, Organization of Petroleum Exporting Countries, it's actually in the Middle East. Iran is part of it. You have Iraq also being part of it. And this morning we understand, reports shows that even Palestine has been hit by some of the missiles. About 80 missiles have actually gone to the Palestinian region. And that's why we are analyzing that what could this be in terms of the threat to Ghana's energy sector. We began this year with a very big hope, and the hope is that we were hoping that crude oil prices, Brent crude oil prices, were going to stay at a stable rate, and that was really going to help us at the pumps. And we know that even with the introduction of that 1 cedi additional levy on the export price of fuel, the main factor was that crude prices were stable on the international market, and the fact that the cedi had actually gained value also against major trading currencies like the greenback or the dollar. But there is a new geopolitical shift, and we are analyzing whether the kind of domestic buffers we've built so far will be able to sustain the cedi and then also sustain the country's energy sector.
Well, Joe, that's Isaac, that's a very good question. We have a comprehensive report, very short, that will set the tone for the analysis you're about to give us. So let's circle back and go to the report, and we'll return to
Despite the work we have done, Ghana is not immune from the shocks of global events. Recent events in the Middle East, which involve an exchange of missiles between Israel and Iran, have started to escalate crude oil prices dramatically. I've asked our Minister of Finance and Minister of Energy to keep a close eye on the development and model the possible impacts on our petroleum prices and prepare measures to protect the recent gains that we have made.
So that's the president speaking on the very issue. But Kofi, that's what he has to say. Over to you.
So, I mean, this is what we have on the smart war. You can see how crude prices have actually fared since the war began. We are looking at it in a span of 1 week, how crude prices have fared on the international market. You could see that just after Israel actually hit Iran with that big missile, what you see is that prices rose as high as more than $75 per barrel. We began the year in the region of the 60s. Now we are talking about the 70s. But the interesting thing is that, I mean, as days went by and all of that, what we are seeing is that prices are beginning to drop from the 75. Now we are talking about somewhere 71. So this was the peak when the war actually began on the 13th. We went very high. And analysts were actually projecting that if you look at this kind of trajectory, it could hurt global energy. But one thing that we are seeing is that big, trending downwards in terms of that 75 region. We're not talking about 71. It's a big improvement. if you compare it to when the war actually started. And if you actually open this up and bring in the context of Russia and Ukraine tension, this is the Russia and Ukraine war, this is the region, and you compare it to what we're experiencing right now, what you see is this big gap between how far oil prices went when Russia-Ukraine tension actually started, where we went above $100 per barrel. We're still within the 70s, even though it's too early to predict where it will be, but most of the big platforms are actually projecting that we could stay within 75 for the rest of the year, and that could be the average, which that means is that we will not be able to possibly reach the highs of the $100 per barrel that we experienced when Russia went against Ukraine, and then the reverse also came through. But, I mean, the big question is, where will Ghana actually be in all of this? Why? Because this is an economy that is trying to move away from dollars to building or backing the economy with gold. And we have actually said that when there is demand for, or when crude prices become expensive, crude prices always move with the dollar. So when there is demand for the crude oil or crude prices become expensive, it means now you need more dollars to exchange for this, to buy crude, which means if you have dollars or you're importing crude, you need more dollars to buy. So demand for dollars will go up. And if demand for dollars goes up, that means that dollar will begin to gain value, and people or investors will be looking at other means of investment. And one thing we've realized is that gold prices have actually really gone up. If you look at this chart, where it has gone up by more than, if you look at the current trend, is more than $3,000 dollars per ounce. And that means that, just look at it, Kojo and Sweetie, when the war actually started, just look at where, how prices of crude went as high as $75 per barrel. And just after, or just when the war broke between Iran and Israel, what you see is that gold prices begins to drop. So you see that big drop. So you see this is how gold prices were going up beginning of the year. If you look at it, beginning of the year, you see prices going up, hitting more than $3,400 per ounce. Now you see that peak here, and a significant, decline. As a result, or one of the big factors many are saying is that now some investors are looking at the dollar as a safe haven. But what we've seen during
it's rising again, right?
It's rising again, but marginal.
Okay.
But, I mean, this chart will tell you, the proper story where you see a big rise in the price of gold, and just when Israel decides to go against Iran, what you see when the war started, that gold prices begin to go down. Why? Because analysts have said that some, investors are beginning to look at the dollar as a safe haven when people are now not considering gold anymore.
Okay.
But if you compare this to what happened when the Russia-Ukraine war started, the jump is not that big. So many have said that, okay, then that could mean that many are still not seeing the dollar as a safe haven. When the dollar is really up, what happens is that for countries like Ghana that imports almost all of its refined crude, and we spend on average about $400 million to import refined crude into the country, we suffer. Why? Because there's a netted effect here where Ghana is also an exporter of crude, which means that when crude prices rise, Ghana will benefit. But on the other side, we will spend more to actually bring in refined crude, where we spend close to about $400 million every month we import crude. And the warning is that we may see prices go up in the next window if nothing is done about it. And we are understanding, or we are learning that even with the implementation of that 1 cedi addition on the export price of fuel, it's simply because of some of these global shifts where uncertainties are so high to the extent that government is rethinking a decision to implement. We understand there's also the GRA segment and all of that, but government is really considering not implementing this now because they know, looking ahead into the other pricing windows, energy may actually have a hike in terms of its price. And so it will be good to actually pause and look at what is going to happen in the international space and all of that. The other strand is that once crude moves with the dollar, and I was looking at the dollar index, and for the first time after the war, we are seeing the dollar index actually rising, which means people are beginning to still see the dollar as a safe haven. That will make demand for dollars go up. The big question is, do we have enough local buffers to actually withstand this geopolitical shock that we're experiencing at the moment? So we've been trying to look at, even how the city has been performing against the dollar. And the good news is that although we've had close to about 5 days of the war between Iran and Israel, what we have seen the city doing so well is that it has actually stabilized. And we are not seeing that kind of discrete, depreciation we saw when Russia and Ukraine war came in the picture. This time around is different. Why? Because government has explained that they have enough local buffers. So you look at the gold board initiative where government says it's now exporting, gold by itself and getting the inflows to back the city. You also look at remittance space, which has been closed, and according to government, they're getting so much from that space to actually help close the demand and supply gap. But the big question is, this is an economy that wants to practice a 24-hour economy that will heavily depend on stable power. And we understand that even if you come to the energy sector, there is that $3.1 billion debt that government is trying to clear. And one major reason why we are seeing a new levy even on fuel is because government wants to get dedicated funding to buy liquefied fuel to actually or fuel to power the thermal plant. But the big question is the pumps. What will be the story going forward? We've seen the windfalls where at the beginning of the year, we've actually seen prices come down to as low as 12 cedis. And so consumers have a cushion of some 3 cedis or 4 cedis. The big question is, with these huge windfalls that consumers have actually enjoyed in the last 2 months, will this war reverse the kind of windfall they have actually enjoyed? And will this be that factor that will prevent government from implementing that 1 cedi additional tax on the export price of fuel? It's still early days yet, but the good news is that prices of crude rose as high as $75 per barrel. But today, or this morning, per the data that we have checked, prices are coming down. And the only bad news for government is that this is an economy which is going to be backed by gold, and we are seeing gold prices also dropping. Will it drop to a level that will make implementation of the gold board initiative struggle a bit? But the good news is that so far, local or domestic buffers have been able to still keep prices at the pump very stable and the city also stable. So one thing we are so sure, maybe at this early stage, is that prices at the pumps are staying stable. But the projection is that if this war continues, and looking at maybe the tension or the temperature in the Middle East, because it's just about Israel and Iran, it's the entire Middle East and the big route for exports of petroleum products. How will all of this pan out? Ghana is still watching. And the reason why we are so important in how this war will travel is that we are even the chair of the International Atomic Energy Agency. We actually chairing that committee, and that 35-member committee that voted with Ghana abstaining and Israel saying that we are even disappointed. You need to change your stance at the moment. It's a big dilemma for the country at the moment, and that geopolitical shifts we are seeing, what will it be? What would the impact be on the country's energy sector, which has actually enjoyed some sort of stability since the beginning of the year, Kojo?
Grateful to you, Isaac Kofi Agyei, there with that analysis there. Let's bring